What's the YouTube address?
All right. Good evening, everyone. This is Brian Beamish, CRInvestor, with Landon LowPro on TradingView. This is our second episode of our trading plan and investor psychology show we do on Saturdays. Today is Saturday, the 5th of April, 2014. Hello, Landon.
Hey guys.
How you doing today?
Yeah, I'm doing fine.
Excellent. Go ahead.
Oh no, that was it. I'm doing fine. I'm doing great.
That's good to hear. We also have a couple participants in the forum, and we always love to have people chime in. So, Andre, you want to say hello?
Hi, guys.
Hello. And there's another Andre. I don't know whether he can chime in or not, but he's here. Oh, he's typing in. How are you doing, Andre? All right. This is, as I said, is our second show. My screen is on screen share right now. The YouTube event, let's see if I can find the address. If you have suggestions on how we find the address, please feel free to let me know. This is a 2-hour event, so we're going to be on a little while. I guess we'll have to... do you guys have a suggestion on how I find the address on YouTube?
Well, it's supposed to be going live, right?
Yeah.
So it should be running now.
Yeah.
Somewhere,
So
right?
I'm not quite sure where you just get the address so I can post it for people. So maybe we can figure that out. This is where others have helped us in the past, eh?
Hey, Sebastian.
So, Fibber, if you happen to know what the
I'm
instructions...
just trying to have a look now. I don't know, to be honest with you.
Okay. Cute. I wonder... Should this not... If I click on the channel, should it not show me what the live show addresses are? Anyway.
I don't think so. Either that or in Google+.
Yeah. I thought this was... well, it's playing out there somewhere. If somebody can think about how I get the address, maybe it'll show here. I did say to tweet it. Oh, here we go. All right, so at least now I can see.
You found it that way.
So it is on my Twitter feed, so all the people that get my tweets, then you will see that. So that didn't take too long to figure out, eh? Okay.
No.
All right, so did you enjoy the show there, Landon? Oh, look at that. The room's filling up nicely. Hello, everybody. If anybody's on audio, feel free to say hello. We've already heard from Landon and Fibber. Anybody else in the audience want to say hello while you're here? I guess the Google address has been posted and the YouTube address has been posted, so I guess we're ready to go. I just, as I did with the format with Fibber's show on Wednesday, and I found that actually went pretty well. I thought we'd just take the first half hour here, and that's kind of why I'm farting around a little bit. It always takes some time to work your way into these shows and the discussions, and so I thought we'd take the first maybe half hour or maybe 15 minutes or so, and talk a little bit about what's going on in the marketplace and how that's affecting us as both investors and whoops, what did I do with the document? Both investors and traders. I thought after that I like to go into I like to take a half hour and just talk a little bit about my risk approach to the market as a broker, and why there are reasons why we don't go 100% in. Speaking more to sort of the risk management audience and people who are just looking to be put on good footing. I'm going to take a quick look at what's called the efficient frontier, and how actually being diversified actually helps reduce your risk. Even those who are sitting heavily in one asset, they think they actually have less risk. It turns out they actually have more risk. So I wanted to touch a little bit on that tonight. I suppose halfway through the show, Landon's going to take over and talk a little bit about trading psychology, his perspective on trading, and I don't know if he has a presentation for us or not. Hopefully we're lucky and he's got something up his sleeve, but we'll have to wait with bated breath. At that point, once he's done his presentation, and we'll leave the floor open to questions. And good to see that we actually have a fairly full room here with participants. So if you want to ask questions through the question period, then you can get the Google Hangout address and hop right on in. But you might have to fight a few people off. So without further ado, Landon, how was your week?
Hey, good. As always, had fun as a bear through this little downturn, which, with the lack of, I guess, the FUD-related news lately, I mean, we were starting to push up, just broke through the short-term trend line, one of the last fib retracements, so a nice little pop-up right at the top of that wedge. Can
you screen share that chart that you're looking at? I'd love to see that chart.
Yeah, and I don't have this one set up on TradingView. I'm just using. Here we go.
Just any old chart.
Yeah.
Picture paints 1,000 words, right?
Just using Bitcoin Wisdom here.
There you go.
But nice little pop right through that. So we might see a run up here. Might try to test 500 again. Might get smacked down somewhere in between, or that next fib retracement. But I've got it set pretty much from the start of this. I'd say 2 weeks ago, all the way down to its bottom. As well as the short-term trend line. As you can see up here, that little line right there, that's your mid-term trend line, bearing down on the whole situation. So
what turns you from a bull to a bear? Or I guess the other way around. What turns you from a bear to a bull?
Oh, well.
Would you actually play this long?
I turned into a bear.
You're a bull?
No, I'm actually out of the market right now.
So what would get you to say, all right, I've had enough, I'm going to be bullish? Just out of curiosity.
Well, right now, quite a lot.
Yeah.
Let's see. Now, I mean, I expect some bullish action here for a little bit, but that midterm trend line has stayed pretty hard, fast, and consistent through the last 6 months. I mean, if we broke that, then I'm hands off, all bullish, all long positions, and I'm probably not going to look at a chart for a week, just to sit back and relax. But
well, isn't that interesting? So if that happened, you'd go all in bullish, and you would actually feel relaxed.
Oh yeah.
That's interesting. Because
I mean, we've had
that's sort of
the wedge all the way through.
I beg your pardon?
We've had that consistent wedge all the way through this entire bearish trend, and it pretty much encapsulates the entire bearish trend. Is that
well? No, regardless of your reasons. The purpose of today's show really is to talk about like trader psychology and trying to work within your plans and those kind of things. So what I find most interesting is what you just said there about how, if that happens, then I can just kick back and relax. And, that's where we all want to be as traders, right, is in that kick back and relax phase. So I find that fascinating that's how that would be defined by you.
Yeah. Well, just on an extended period of time, really, because that's really the defining line for this bear market right now. Every time it's been tested, the bulls have just been smacked around, and we've seen so far three major short-term trend lines in this midterm bear market. So let's see, one here and one here. Now, as we can see, what happened every time the short-term trend lines were broken, we had a consistent bull run, which makes this kind of interesting. I'm not sure. I mean, I would think the same thing would take place, but I'm just not so sure with all of this news that's been coming out. It's just hard for me to see a run back up to 550 plus or so to challenge the midterm trend line again with all the news that's been coming out. But I don't know. We'll see. But anyway, that's getting off subject.
Well, it's we
You've been
don't
telling
really
me to
need
go
talk.
bull for 3 days.
I mean,
Ever.
I find it interesting. Do you actually trade any other markets, or is Bitcoin basically the only chart that you really follow this closely?
Well, that's a kind of a good intro into for those who don't know who I am and who you are. For me,
Well, yeah, that's a good idea, eh?
yeah,
How can you
absolutely.
tell this is the second episode? Who is
So-
this clown
so-
talking anyway?
Yeah, exactly. Okay,
I
for
think I
me,
said
LowPro.
I did an intro, didn't I?
Uh,
Maybe our names, but I didn't really.
yeah, yeah, those are our names. Not really who we are.
All right, who the hell are you?
Yeah, absolutely. Well, CRInvestor is the veteran trader, and I'm definitely the newbie trader side. So I've only been in this 6 months so far, very profitable. So I'm beating the 90-90-90 rule. Woohoo! And for those who don't know, the 90-90-90 rule is 90% of investors lose 90%, or 90% of traders, retail traders, lose 90% of their capital in the first 90 days. So it's been 6 months, so blew that apart, and still consistently well into profit. I average about 1% a day, solely on Bitcoin. I don't trade any other markets. I've got some other investments that I just let sit and ride. But this was really my first experiment into trading, and I dove head first in. So I started with a small amount of capital. I think it was about 0.5 bitcoins around the 700 level back when we were having our first rump up to 1200. So and then from there, I've been able to consistently grow that through the entire bearish market. So everyone's like, oh, LowPro is such a bear. It's like, no, I just started my entire trading realm in in bear phase. So I'm just used to it, I guess. But so what about you, Brian? Or about your history and experience?
Well, I did my first stock trade in 1980, maybe 88, 89, somewhere in there. And
I was
it
born
was
in
funny
'88.
that you were born that year.
I was born in '88. Yeah.
Oh, isn't that funny? There was a big stock market crash the year prior to that, 87. Anyway, that's an interesting story in itself. But it's funny, that first stock trade I did, I bought 20 shares of a blue chip company, and everybody in the office laughed at me, right? Because, well, not everybody, like all my buddies. Like, it was a really cool summer job that I had. I worked on Bay Street, which is the stock place here in Canada. That's stock headquarters. But anyway, and I bought 20 shares of like a $10 company, or say, some crazy number like that. And everybody laughed at me because I didn't realize the percentage gains that I needed for the stock to move to actually make any capital gain on the trade. So I mean that's a great sort of first stock story because it's there's so many moving parts, and when you're young, he's you know you just anyway. So I started basically doing like the worst kind of trade you could, but that was many moons ago. Um,
Yeah. But
and
what about since then? the
Yeah,
I mean, that's
well,
a
I
long
was
time
a
after.
futures broker, stock broker, options broker. Um, it's funny how I've all just jumped from one thing to another to another to another to another. And I was proprietary crude oil trader, futures trader for a firm in Chicago now. And now I'm a YouTube entrepreneur. It's funny because the only reason why I'm involved with Bitcoin is a cousin of mine. I had dinner with him, sort of one of these family Christmas dinner things, and he was asking me about Bitcoin, and I had no clue what it was, and so that sort of started my Bitcoin adventure here. And I look at the market from a guy who's basically geez, I started this game trading. Like I said, I went to UBC in the late '80s, early '90s, but I was in and out of the market all through the fall of the Berlin Wall and the end of communism, and then the Iraq Gulf War, and right through the Asian tigers and then the Asian contagion and all that mess with Hong Kong and the British, and then through the dot-com bubble. And what's funny is, there were lots of smart people that called the top of the dot-com bubble in like 96, 97. And of course, they looked like complete fools. And what I see happening here, with something like a Bitcoin, the same sort of thing. So it's really dangerous to call a top on these things. And all through the dot-com boom, I mean, it was just insane. And what was really interesting about that is, as a broker, I literally watched how the actual demographic system works from like inside the system, watching it the whole. It's absolutely remarkable. The entire mechanism of our society is all built on pulling all of these like accumulated assets out of the baby boomers' pockets right into their retirement. And I mean, to be on the ground floor and watch the mechanism at work is just absolute. That's an interesting experience in itself. And then, of course, like the subsequent meltdown after it, and the end result. It's a fascinating experience. So, been really fortunate to watch that whole story play itself out. So let's see. That takes us, say mid 2000s. I was working as a broker. Getting a lot of messages here. Hold on a second. Somebody's trying to get my attention. What's this? Look at him. Hey. Let me in. Hold on a second. Guess we better give him this. Copy. And then pop over here. Whoa, look at that. Make it filled. There you go, buddy. All right. Okay, where was I? The story of Brian. Right. So, what time is it? Oh, we still got some time, so we're still filling in. So that takes me up to, I guess, about 2005, 2006. Totally was a broker all through that mining boom. That was a lot of fun. Sadly, my wife passed in 2008, and I have a special needs son, so life's been pretty challenging. This, I like this as sort of like a really good good sort of giving back to the universe kind of thing here, doing these shows. You know, I don't certainly expect any remuneration.
And they're a lot
But,
of fun.
you know, hopefully I'm getting out all the information that I've accumulated over the years. You're more than welcome to come to my website, therationalinvestor.ca, and I'll post that. I saw somebody post that about the show before, so I'm going to see if I can put that in here. Because somebody was asking what was my website before. I can't do that, so whoops.
Yeah, just Google CRInvestor. There you go.
Oh, I hate when it does this, though. Oh, it did this to me last time. Oh, God, what a nightmare. The exact same thing happened, and I can't do anything. What am I supposed to do here? It just freezes everything up. Anyway. So, and we still got 5 minutes in our intro time, so it's okay if I blab here. I'll try one more time. So just get rid of this. Somebody told me just to get rid of all this stuff. All right. Okay, where was I? So, I like doing these shows on TradingView platform. They're a lot of fun, and I've met some really cool people. And you're more than welcome to look at all my videos and all my website material. A good portion of it is either free or, you know, basically a minimal cost. And I run tutorials on top of these shows. So I'll put it all together. It's a lot of fun, and that's sort of why I'm here. All right, so that's me. What should I leave it on? I should leave it on that. Where the heck is it? There it is. That. So, what time is?
There we go.
Did I answer the question?
Yeah, pretty much.
Cool. So,
managing risk.
Yeah, I guess that's what we're talking about today. Per my little schedule here, I thought we'd basically spend now for the next half hour. I'll just give you my little presentation on risk. We talked, I guess, more about trading risk last show. Probably talk a little bit more about investor risk and, you know, things to consider when you're participating in the market. Some of you may look at this and say, "Oh my God, I just heard this crap." And if that's the case, you know, so be it. A lot of this is repetitive, and that's half of the problem with financial planning and good portfolio management is that you know, it's rules that you don't want to hear, and yet they don't ever change. They're all the same. So anyway.
Well, and I'm glad you're covering the risk management strategies because for me, I believe, you know, a big portion of why traders fail is the emotional side, but the other side happens to be just the risk management aspect of it. You know, that's why we have the 90-90-90 rule. 90% of traders lose 90% of their capital in the first 90 days. Because one, they tend to be emotional, especially starting out, and two, they tend to not understand managing risk at all.
All right, so let's see if you can see my screen. What screen do you see? All right, so I'm going to change the screens now, and how are we going to do this? And keep in mind, audience, we're still kind of new at this. We're still figuring our way out. I gotta go like this, and then I gotta go like this, and then I gotta go. Are you gonna work for me? Alright, now let's see what you guys are seeing. Alright, so these are basically the topics I'm going to be looking at today. And I just did this up in a nice little open office document. It's nothing sexy. I suppose in the future, if we get a whole staff of interns working for us, we'll probably It's a dance and a show with it. I'm just being silly. And what is it we're looking at? Let's make sure. There are a few things that I like to talk about when I talk about risk, and the first, of course, is I have two simple rules of investing, and if you follow those rules, they generally keep you out of trouble, and it's actually quite difficult to lose money. So a good idea just to review what those are. Excuse me. I'd like to talk today, of course, a little bit about risk mitigation versus risk minimization. And, understanding that we as traders have to live with risk. That's just part of our lives. I wanted to talk a little bit about broader market risk. Say the S&P falls 20% tomorrow versus, your personal trading risk and what losses on those particular trades mean to you. And finish off with just the general notion that as investors, longevity is the key to us, and so we should always play from a position of strength. So talking a little bit about what that means and what it doesn't mean, and then finally applying the rules to a particular trade. And really, I was actually thinking, I did a nice little tutorial this afternoon, and we just happened to identify a very acceptable trade that meets risk reward. And we could even maybe, if we have time, we can just draw up a nice simple trading plan of how to take that trade and what would be some of the mitigating requirements of the trade, depending on how time goes. So we'll start off with the Canadian Rational Investor's 2 Rules of Investing. And by all means, and I say this every show, and I'll say it again. I wrote a course, a publisher of continuing education material, and I had a conversation over Christmas, and she thought it was a good idea that I write a course for some professionals that she has under contract, and so I did. Basically, it's about a summary of 20 years worth of work in the financial services industry. That course just sits on the internet. It's a Google Docs document, and you're more than welcome to take a look at it at your leisure. I would hate to think that you copied it, but if there was something that you really needed, I'm sure we could work out something. I'll paste that address right now. So the course itself is basically like a testament to what I've done in the markets for the past 20 years. So it speaks to fundamental analysis, technical analysis, trading plans, investor psychology, all that kind of fun stuff. But what I found, after writing the course, and I already sort of knew it before, was that you can actually break the entire investment process down to 2 basic rules. And they are sort of like your tactical plan and your strategic plan. And really, those 2 plans have summarized in 2 rules, when it just simply comes to investing. This, in fact, if you want to see it, I tweeted before the show, this is the tutorial that I did today, and just a very typical trade setup. And what were the risk reward requirements needed to justify taking the trade. And I can share that right now, just a quick screenshot. Should look something like that. Let's see if your screen's up there. Yeah, there it is. And I published it, and I wrote some notes on the trade. So, it's not like the trades don't exist. So they do. It's just really a question of building the trades around your risk parameters, and all that. So finishing off that previous thought, if I can just show you the course, and I think I just posted the link and the address, so if you want to take a look at it, you're more than welcome. But you can see on your screen right now, this is the course that I was referring to that I wrote, and you're more than welcome to look at the Google address at your leisure. I broke the ideas basically into two rules. The first is everything about how you're going to attack the market, right? It talks about trading setups and all that. And so when I showed you that post that I did with the tutorial of the gentleman, that's just a typical setup, right? The second is really what today's all about, and that's about risk. And how do we always ensure that we can play tomorrow? And admittedly, this is somebody who has a professional designation with the Canadian Securities Institute, and somebody who is a financial planner and a broker, and assets under management, and people relied on me. This is the kind of advice that I give, right? So I have heard, since I've been at TradingView, and I hear about it in the market all the time, people who don't follow the rules and who do take exorbitant amounts of risks. And I have heard of their horror stories. I know clients. This is all summarized in this introductory write-up I did for this course, but the rules are basically really simple. And when it comes to risk, you really shouldn't take more than 5% of your portfolio's risk on any one single idea. It's just that simple. What I find fascinating is that those that have taken the risk and have lost, some of them are completely blind to the fact that they broke this rule. Had they never broken this rule to begin with, they would have never been in that position to take the horrible loss. It's fascinating to watch as humans act. So, there are people that will debate this, but what I find fascinating about this rule is that it wasn't developed by Mr. Stock Market. It certainly wasn't developed in any university or higher education institute. This was actually developed by guys who gamble for a living. People who play poker for a living. They're the ones that came up with this rule, So, that in itself should speak volumes to anybody out in the audience. Really, this isn't a stock market secret. This is a Vegas secret. But anyway. So, two rules. Number one, all about you attacking the market and how you're going to attack the market. And that's great. We can talk about tactical plans any old day. Rule two, what we're here to talk about today, is don't put more than 5% of your money on the line on any one single play. Now, there are a number of different ways that you can approach that 5% rule, but it's been my belief, and I've watched it in action over the past 20 years, that this simple strategy will keep you out of harm's way. It's obviously going to limit your upside. Maybe you have 5% play in one of these coins and a 5% play in another coin and then another coin. You could do that, but don't let any one single trade represent, its loss represent more than a 5% risk of your overall stake. All right. Let's see how we're doing with regard to our plan. Where were we? Alright, so it's now, I'm about 8 minutes in, and we talked a little bit about our two rules. Let's move on to risk mitigation versus minimization. And let's see what you guys can see. Did I screen share that with you? And keep in mind, I'm not very good on the computer, so I'm just trying my best here. Not interesting. It won't let me show you that anymore. I wonder why. Now maybe I will. There it is.
Now, your risk management is much different than, say, me and Flipper's risk management. That's for sure. I mean,
Well, what I see is, and what I find fascinating, is that the risks have been taken and horrendous losses have been incurred, and yet no acknowledgement, or maybe a subconscious acknowledgement, right? That the irony of it all is that risks can come from many different sources. And it's certainly not just a trading loss risk, and that's we're going to talk a little bit about, when we get to the efficient frontier. So, and then from what I understand, Landon, you have assets also other places too, though, right?
Oh, I do. I've got ETFs and other investments that I hold for a much longer period of time.
Right.
Versus my trading, which can be once or twice a day, or for several days to a week in one position.
Right. So what I would say is, a typical client that would come to me, they would say, I've got $250,000 in net worth, of which 150, 200,000 is in my home. I've got maybe another 50,000 in equity in a cottage. I've got maybe 10, 20,000 in equity in cars. I've got maybe 5, 10 grand in credit card debt I'm carrying. I've got maybe an income of 30, 40,000 a year. And all those kind of things, right? So by default, maybe they've got 20, 30,000 in the market, but by default, even if they lost that 20,000, it may be only like a total 10% hit to their net worth, right? And so the 20,000 that they had as their stake in the market, right? I wouldn't really want them to take more than a $1,000 hit on a trade. I don't think that would be a good idea. I could see them put $2,000 into a trade, and if it went down 50%, then we would say, look, we're wrong. Let's get out. I think that's good money management, So I think, so that means, if you came to Bitcoin, that would mean, as a financial advisor, the gentleman that I was working with this afternoon, who I was giving a tut to, Eric, he and I walked through, some scenarios for this Bitcoin, and you could probably justifiably make a case to buy these things at around $400 or so. Don't go in all full bore, but my little scenario, if somebody came to me with a couple grand, that would be like 5 coins, and I'd say, yeah, maybe buy 1 coin a month over the next 6 months. That's not a bad idea, unless we saw some rip-roaring buy signal, and then, you just go and buy some more. You understand what I'm saying? And that would be a typical trade, and for them, I would say, yeah, risk 50%. So if your cost is $400, if it gets down to under $200, we should seriously consider letting this thing go.
Well, you guys know what the ratio is normally for most hedge fund managers? It's usually around 2%. Is that right? Per equity, commodity, per whatever.
What's that risk?
No. They're diversified portfolios.
Yeah.
They usually have a limit of about 2%.
Well, yeah, I can't comment specifically, but you look at most. You see, that's a problem. Is once you get to a certain size, right? The irony of it all is like, and I used to have clients that do this, and I can't remember the term. You actually undermine yourself if you get too big on the diversification. And it actually becomes statistically impossible to actually beat the benchmark. I think I think it's around 20 securities. Once you hit that threshold, it actually becomes statistically very, very hard to beat the index. And I watched a guy do it. Yeah, he just wanted to own everything, and his philosophy was, if I don't own a little bit of everything, then I'm going to miss the ones that really move up really big. And that just didn't work.
Well, that's usually like 2% of like 500 million at any one time, invested over short or long positions over a 3 to 6 month time frame. So it's much
There's
different
a million different ways to skin this cat, my friend.
Oh, yeah. So it's much different than a guy like me per se who is dealing with trading with a much smaller amount of capital.
Well, you also are very young too, right? I mean, let's face it. A guy like you're very young. If Bitcoin went kaput, right? 10 years from now, you could be sitting around a Christmas table joking about, oh, you remember that Bitcoin? That was such a funny story. And it would be, you would still be in your professional prime and working away, building your career, Whereas, if a senior citizen comes and looks at Bitcoins, that's a substantial risk to them.
Oh, yeah.
Now, I watched one of these YouTube links about the South American, who's actually an interesting testament because a lot of South American countries suffered through hyperinflation, which we really haven't suffered through here in North America. And the whole concept of Bitcoin is really popular down there. So, and there's a lot of people down there. And we got World Cup coming up, so we might get a bit out of that.
I could see that a lot, especially Argentina, if you're from there. Argentina, it had just pretty recently gone through that. Not what was it, 20, 30 years ago, or something like that.
Oh, they say. Well, you can see, that's a remnant that I really miss of the Cold War. During the Cold War, you'd have these hyperinflation little bubbles that would happen all over the world. And like Greece was a wonderful one. I mean, you could literally set your watch to them rolling the currency back about once every 10 years because they would go through these things. And South Americans too. I mean, it was remarkable. About once every 10 years, they would have to have a major devaluation crisis. But we don't have that anymore because now there's nobody to prop up. We don't have to prop these countries up anymore. Now, Greece is a whole can of worms in itself. But anyway. All right, so where are we? Risk mitigation first versus risk minimization. This, and really what I'll do is I'll hop the group back over to the course material because really what I like to do is just reinforce the material that I wrote because I think it's pretty good quality stuff. Let's see, we'll go over here. Boom. All right, so... This is way, way down. I should probably just fast forward through all this. All right, so I guess what we have to accept when we participate in the market is that we can always minimize risk, but you just can't get rid of it. It will always exist, and I think the Mt. Gox episode is a perfect example where, tragically, there's nothing wrong with the money flows. Basically the Fed's got the spigot on full bore. People, in my opinion, we're going through an economic expansion. You look at the S&P 500, and it's just charging to new highs. So to me, that's a bull market. You have the Bitcoins themselves, which are, I think, a fundamentally sound story. I mean, it's believable. It may not end this way, but that's here nor there. And if I understand these geometric progressions, we're sort of right in the middle of this cycle. And yet you had this risk that really nobody really actually fully appreciated. And that was that these exchanges in themselves might just go and steal all your money. Or blame it on somebody else stealing their money. So that in itself should be, number one, a testament to no matter how good the story is, risks do exist. It's just the way life is. I mean, they don't call them car accidents for nothing. They don't call them car on purposes, right? Even though a lot of them are, but that's another conversation. Risk exists, and that's really, you can argue why the insurance industry exists in the first place. So if we understand that, hey, you know what, this is a risky world, merde happens, as the French say. I guess we have to understand that really, the concept of going 100% of your assets into something like a Bitcoin, in my opinion, is not very good money management. But it turns out that even having your assets in 100% cash, that in itself can be a very dangerous situation. So with that idea, there were some Nobel economists who sat down and came up, basically worked the notion. What am I saying here? I'm going around. I'm trying to read and talk at the same time, which is never a good idea. But they came up with the notion of the efficient frontier, and they actually won the Nobel Prize for it. And for some reason, their names just have eluded me. But anyway, my economist buddies would kill me for this. But anyway, and let's see if I can find the image for you here. The efficient frontier basically mathematically proves, and let's see if I can find it. Maybe it's in here. Oh, that's right, it's in this. Bear with me here. YouTube presentation material. Here we are. Okay, let's see if we can see that. Excellent. All right, the efficient frontier mathematically proves that because every asset class, every asset in the world has some sort of risk, having 100% of your assets in any one asset class is actually quite, it's actually more risky than diversifying. And the classic historical example, which I was sort of referring to just a moment ago, was the Germany's if you were a German in the 1920s, where at the very worst of it, it took a wheelbarrow full of cash to buy a loaf of bread. And Landon just referred to the hyperinflation in Argentina, if I pronounced that correctly, a moment ago. Oh, good. All right. So, and frankly, I'm a little embarrassed, and while I'm talking to you about the efficient frontier, I better go and find out what these economists' names are, because that's wholly unacceptable. In fact, while I've got you here, let's just type it in.
That's okay.
Well, it's a good demonstration to show you that this research is for real. All right, and I can post this if you want to learn more about it in the chat here. Boom. So I know there were people that were asking about this before. So there you go, Harry Markowitz and others. So at least I got the name right. But anyway, basically proved mathematically that you're far better off to take a diversified approach to investing rather than owning 100% of any one asset. And in actual fact, depending specifically on your risk threshold, you will fall somewhere along this efficient frontier. And in essence, it's the maximum amount of return that you can get with the least amount of risk. And you just figure out what your risk level is and what kind of reward you're looking for, and it will basically tell you what mix of assets you should have in your portfolio. And basically, this is how all fund managers manage their portfolios. Now, it may not necessarily be stocks and bonds. You may have correlating assets in a group where some have a high beta and others have low beta. But the long and short of it here is that your portfolio mix should at all times fall somewhere along this frontier. So, and I think our example from Germany from the 1920s speaks highly to that. Now let's see. Let's go back. So we talked a bit about the efficient frontier. Let's see how we're doing on time. Got about 5 minutes left. How am I doing on objectives? I wanted to next. Let's go back here. Okay, we should talk a little bit about broader market risk versus personal risk. So keep in mind, the broader market risk, I think, is, who's this? LowPro. Trade show. What does that mean? Did you want to speak for a moment, LowPro?
No. Go ahead.
Okay. Look at that. These guys are just teasing me. Ay, caramba. All right, so the schedule. Oh, fudge. I just closed it. What a knucklehead. I wanted to talk a little bit about trading risk versus broader risk, so broader market risk. Keep in mind that the broader market will go through its ups and downs. And, looking at this Bitcoin, I've commented publicly that I thought that the market is contained within a very wide channel, and that channel can actually see prices move dramatically, and yet still maintain the current trend. I think this might be it here. Oh, that's crude oil. Anyway, I don't have it just off the top of my head. The point of the matter here is that there will always be risks from the market. Mt. Gox, of course, great example of that. But then there's also your personal risks. So when you look at your trading plan, obviously you have a certain amount of risk. If you have $5,000 to work with, and you followed my or CRI's rules of investing, then you really don't want to take more than about $250 risk on any one trade setup, which actually is not a bad number to work with. So that's all about personal risk. So there are two elements to this. So, and the interesting thing is that sometimes broader market risk can actually play into our hands as traders. So, you might have a very frothy stock market and all of a sudden it breaks hard and comes back to what you perceive as a support line. You actually taking a long position, in your eyes, your personal risk, the risk actually of the trade is fairly low in comparison to just before the break, buying the market where the risk was actually extremely high. So try and keep that in mind. So I just wanted to touch on that as well. And I guess I'm just going to finish off. I've got maybe 2 or 3 minutes left. I posted this chart here today with a tutorial I did. And I think this really speaks to everything that I've talked about today. This is one trade setup that I was taught, about 20 years ago, and it still seems to be valid today. The key to this is, this is speaking to personal risk. If I wanted to take this setup, then this is the kind of risk that I was looking for. So automatically, if I was going to consider this risk, then I needed this reward box to be at least twice the size of the risk box, which indeed was the case, and you can see how this trade setup worked. Now the interesting part about this, and this speaks to more of like trader discipline, is that initially the trade did work, and then the trade started to not work. And what I find fascinating is the gentleman that I was talking with, we were reviewing this, and he even chuckled that I might get a little bit worried down in here. And really, this is just truly speaking to your trading plan, where if you were looking to take this trade, then these are the parameters of the trade, and you just have to live with those parameters. And that speaks to everything about the personal risk, not necessarily the market risk of this Bitcoin in particular. So I think that about summarizes my presentation for today. Unfortunately, I closed the window of, I don't know if I can get it back here or not, but I closed the window for the, oh no, I guess I didn't. See, I'm still such a noob at these computers here.
You got your screen share on?
Yeah, I guess you guys didn't see any of that, eh? Oh, isn't that funny? Well, hopefully you can see it now. And this is the trade setup that I was talking about, where the risk taken on the trade was half of the expected reward, and how the trade worked initially. Then it started to not work, and yet if you just lived within the parameters of the trade setup, you would have done nothing through here, and then ultimately your upside target was hit. So it really speaks to the sort of the trader psychology of the trade. It speaks to having specific risk levels in mind when considering a trade, and then making sure that the expected reward is twice that. And sort of, like I said, this kind of trade setup and taking this trade speaks more to personal risk and how it fits into your trading plan versus broader market risk.
I actually think twice that is incredibly low. Do you have a normal guideline for your risk to reward ratio normally? I think you mentioned
2 to 1 is
1 to
a magic number.
2 to 1.
Yep.
I think 3 to 1 is low for me.
Well, so what ends up happening, and this is just one particular setup, and the setup comes alive when it's 2 to 1.
Mm-hmm.
If this move was bigger, and yet the double bottom was just as tight, this risk reward may have been higher. I do the bot setup, and the bot setup itself is make sure that you can. So the bot setup trades, and actually we had one on crude oil, very pretty last week. Let's see if I can find it. The bot setup is basically a 3 to 1 risk-reward ratio, so it's very attractive. And I'm sure if you go through my feed, you can probably find it. It's in here somewhere. Well, sometimes it's tough to find these charts when you really want them quickly. And then the OTE setup. Oh, actually, here's a whole bunch of bots and OTE. So later on, this gentleman and I, we looked at if you're going to play, here's the OTE. So from this low, right, because this low is actually, I can't move the box. Anyway, the low is down here to this high, and I think the high was somewhere up in here. The OTE is there. So this OTE setup says you risk to the low, so I guess the low is right there, and your reward is there. So that works out to about a 2.5. What is it? Yeah, I guess it's about two and change. I know. I'm sorry. OTE is 3-to-1. It's 3-to-1 risk reward. Um, no, that's not right. What am I trying to say here? All right, so the OTE trade is basically you risk down to the bottom of the formation, and your reward is a tag of the old high. So in essence, your risk is like 30% of the range, and your reward is 70% of the range. All right. The bot, and I know these are probably tough charts to read, and this was the tutorial. It's basically the ABCD pattern, and it has a 3-to-1 built-in risk reward. So, and those are, the setups. Now, whether they actually happen, there are different ways to manage the trade along the way, but those setups have those levels built into them. So, hope that answers your question. That was awfully vague of me. I know. I'm sorry. All right, so it's 6:05 now. You know what that means? That means I should shut up. You've got the stage, my sir.
Well,
I'll come in and affirm or help you out as needed. But this is now your half hour to shine.
well, there's one thing that you addressed with the to reward ratios just a minute ago, and it's something I was thinking about with a lot of early new traders that take place. And a lot of people use that 2-to-1 or 3-to-1 ratio, but a lot of new traders aren't as good with the setup, or especially not as good on being accurate with the market. And it was actually something Flipper had sent me on a video. They were talking about some of the misconceptions, especially on the forex market, on the risk management side, especially when you tie in other factors. And I think what was it? They use the example of a $10,000 deposit on a margin trading account. Say does 10x leverage, and so you got 100,000 in exposure. And let's say you bought 50,000 of the S&P 500 because you thought it was going to rally up to 1% on that day. Because as a day trader, I mean, you're just in and out of positions all the time, and never sleep in them, of course. And so you put 100 basis point target and a 33 basis point stop loss, or 500. I think it was $500 on the upside, and let me see, what was that? 165 on the downside. So you have that risk to reward of 1 to 3, 33% break even threshold. So now if 50% of your trades are right, you're making money. Downside is even some of the best traders in the world only get about 50% of their trades right most of the time. It's much less for a lot of new traders, is where that 90% of traders lose 90% of their money in their first 90 days rules come in. But then however, if you pay to buy and sell of the S&P 500, the commission of 10 basis points or $100 or 20 basis point round trip, you're making your net downside more like negative 265 and your net upside 400, which changes your risk to reward ratio. That puts it more 1.5 to 1, or about a 66% break even point. Now, I mean, that's just to break even. Over a long time frame, you have to get 66% of your trades right just to break even, with commissions tied on in that 1 to 3 range, and good traders can't get get it right 66% of the time, let alone your normal traders. And I think they gave the example of how often there are those 1% price swings in the S&P 500 in a day, and I think they had got in it barreled down to the odds were about 11%. So historically, you have 9-to-1 odds on having a 1% day on the S&P 500.
Hey,
So
Landon, I'd love if you could do like a little one pager or something on these statistics. That'd be totally cool.
sure.
Maybe next show. Like, I mean, I love your picture.
I'm yeah. Well, I'm just pulling off the top of my head from what Flibber had sent me. But anyway, I mean that makes basically your adjusted probability on your downside exceeding your upside by times 4 over a long period of time. So you're 4 times more likely in that sort of scenario to lose money rather than gain money. And with those ratios, you're pretty much you have better luck at the slot machines because in most gambling jurisdictions, the laws require payback percentages of at least 75%, which is why so many young traders, early traders, end up losing it all. There's a big factor anyway. So, but yeah, any thoughts, Brian?
Oh, it's all good. I'm listening. I just went and grabbed the. I'll try and screen share that page that Andre's linking.
Mm-hmm.
Professional traders versus retail traders.
Yep.
Is that it? So if anybody wants to see what the page is, Andre just posted it. Thanks, Andre. And I'm having some popcorn and watching the show. Go.
Well, thanks. But yeah, that is a really good video, and it really attests to the uphill battle that we all have as traders. Now, luckily for a lot of us out there that are trading Bitcoin, there's a much higher probability of going above 1% in a day for Bitcoin. In fact, we've seen 5 to 10% swings like it was nothing on a consistent basis throughout the year with Bitcoin. Even in this bear market. And from my personal experience, I've mostly started this all throughout this bear market. So I got into it a lot as just scalping rates and some light swing trading, but mostly just scalping incredibly oversold positions for moderately safe exits, pretty much. And a big difference between and this is actually nothing to do with what I was going to talk about, but just kind of tying into what you were saying with the risk management. How it's much different from how you manage risks, Brian, in your trading, is that for me, I mean, and I think Flipper's also similar. I go 100% in with my role with trading, and that's because I only take the extreme side positions that have already started to swing in my favor with an incredibly strict manual stop loss. So
No, but that's the key there. I mean, I don't care. You can put your whole stake on the line. That's fine. But the question is, how much of that stake are you going to risk on that trade?
0, pretty much. Basically, my commissions. If
the trade moves against you, at what point do you say I'm out?
Basically, as it starts to move against me.
Well, so that's the key right there, right? It's not. I mean,
so I don't sit and hope that it's going to tip the other way. I get out before those chickens come home to roost.
So let's say you had $100,000 in bitcoins, right?
Yeah.
And you
now
threw
that's
it
different.
all on the line, right? and the trade went against you 1 penny, I don't know, whatever amount, that now you're down like $250.
Now
Are you gonna
that
bail?
is that is much different with such a high volume, because I'm still in the $10,000 to $20,000 range right now. So my volume is not really eaten up, and I can still play very selective with my positions.
Right. So
However, if you're dealing with $100,000 in a trade with Bitcoin, at minimum you have to have a swing position. Um, so and in that sort of aspects, you do have to move over to more of the Brian Beamish style of trading.
well,
Uh,
I had a gentleman who had 125,000, and he wanted to day trade, and I watched BTCE closely for maybe 2 or 3 weeks, and literally you can't get the necessary liquidity. It just doesn't
mm-mm.
exist.
I mean, unless you did something tricky, or I guess maybe if you were on Huobi, you might have the kind of liquidity. But talking about the managing risk side, um,
Yeah.
I don't. I would not trust 100,000 of my dollars over in China, especially with all the news coming out lately.
Well,
Sorry,
it
but
fascinates me that people actually expect China to like take over the financial world. That'd scare the hell out of me, man. But anyway,
well,
that's another
their private
conversation
sector
for
has done
another
really good, especially if you're over in Hong Kong, outside the mainland government. But that's a completely different story altogether. But I could see maybe, that might be a possibility if you were really really good to have that $100,000 broken up into multiple exchanges and all do the same trades and the same positions at the same times. But
Yeah,
gee,
I mean, there's no reason why. I mean, literally, you could, and I'm sure that people have.
mhm,
But you could set up a nice little algorithm system here just to trade 61.8 tags, all day long.
yeah.
But anyway,
But and Andre's like, I used to trade 150 to 200K per day on Mount Gox. It was Mount Gox too. They had a little more oomph.
today,
Yeah, they
Andre,
did.
well, Andre's a monster. Holy moly. He would do really. I'm surprised Andre hasn't gone over to TST. He would do well there
On Huobi?
on trading futures. I mean, the
Oh,
irony of it
yeah.
all is that you guys are so enamored with trading bitcoins, but the commission structure just eats you alive. I mean, we pay, on a futures contract, we pay $2.50 each side. And these
For
futures
how much?
contracts are like $100,000, $200,000 a piece.
Whoa, really? Wow.
Yeah, whoa, really? One
Wow.
tick is 10
Nice.
bucks.
I like this.
Yeah, well, I mean, especially you, Landon. I mean, you got a head on your shoulders. I mean, the irony of it all is that, I mean, if you, I have associates of mine that tell me, and no offense to the Bitcoin community,
Mhm.
but they tell me that serious money can't invest in Bitcoin. They
Yeah.
just can't look at it. So, I mean, if you guys want, if you guys can demonstrate that you can trade, and you and Fibber have clearly demonstrated that to me. I mean, the world is your oyster. There's more money out there than you know what to do with that is seeking people like you.
Yeah.
But you got to learn that on your own.
Yeah, I think I showed you my journal at one point, or at least one of my older journals. I maintain about
Yeah, you do
a
very.
1.2% a day.
Yeah. Now I
But I
know
mean, there's some
February
days I
doesn't
won't
like the
be in a position.
establishment, so I can understand why he's Bitcoin to the bitter end.
Oh yeah.
Um, But either of you, I mean, if you're open to the idea of, there are so many desperate people out there looking for people who knows how to manage money, and that's
Yeah.
an invitation to all of you out there. I mean, you're more than welcome. And tell them Brian Beamish told you I get a discount on my TST garb.
I'm not sure. I'm not sure a hedge fund would enjoy the amount of risks that I take on a particular trade.
Well, no. What it sounds like to me is, though, that you manage your risk, right? Like
Mhm.
if you tell me if a position's going to get me, I'm out. I'm out. I don't care.
Yeah.
I'm out. and you follow that, then you are following CRI's 2 rules of investing. And you don't even realize you're following them. The issue is don't take more than 5% of your risk. So, if you're dealing with 15 G's of Bitcoins, well, that's $750. I'd imagine that if a position went against you $750, you'd probably be long gone.
Oh yeah. Well, in fact, in the last 6 months, I think I back held one single time throughout that, and there was back that time we were talking about FUMAR, FOMO. Yeah, that's it.
Yeah.
Fear of missing out, getting stuck in that trade, and basically the only reason I held on was because I knew that there was going to be incredibly positive news within the next week or two within the pipes. But just sitting there and watching that tick back in a margin position was just like I needed some Valium or something. I don't know what, but it was awful for me. Anyway, but one of the big reasons, and this is kind of pulling back into what I was going to talk about. One of the big reasons, and well, one of the most important things I believe is best for a trader is understanding the patience and the time side. And this might be Flibber's downfall here. Sorry, Flibber. But there's okay. But I believe a trader's greatest friend and asset is time. In a market there are a lot of ups and downs, but for me the winning trades just come to you. And anytime I'm in a position to where because there's a lot of there's a lot of times I'm in a position where I'm not sure how things are going to get down. There might be some potential reward in there, but even with the prospect of reward on the positive side, if I'm unsure of a position, I stay out. And sometimes I'll take a smaller position that doesn't really provide me with a very big reward. I look to have I'd say 2 to 3%, just with Bitcoin, at least a 2 or 3% gain on any trade. But sometimes I'll have a setup. And you guys see my screen? There. Hello? Anybody? You guys see my screen?
Yeah, we still see just your mug.
Oh, let me try this again. Okay. Go to Google Hangouts. How about now? Can you see my screen?
I can see my screen.
How about now?
I think my screen's on your screen. Yeah, there you go. Now
Okay, good deal. All right. So let's give a few examples of here just recently. I actually have not traded much through this bullish move. Since we are in a bear market, I play more of a role of a bear position. So especially with the news here lately, and all this FUD that's coming out, the fear, the uncertainty.
Sorry to interrupt. Just for people who don't understand, I've heard you use that term a few times. What exactly is FUD?
FUD, fear, uncertainty, and doubt. Usually driven by news, which is the China ban rumor talks and the unofficial quote unquote announcements and the this and that exchange got this from this bank and that and so forth. So basically stuff that'll move people to sell. Which is what's been happening here recently. In fact, this last move, this last run up to which it wasn't really the trend line then, but it was one of the fib retracements. This last run up to the 490 level, where it's trying to push through that $500 resistance. Funny that a new piece of quote unquote news that was very negative in China just happened to come out at boom, that right moment. where there were a lot of leveraged positions and just barreled the price down. And I had shorted this position, but and probably should have turned it into a long down here, but like I said, since this is an overall bear market for me, I look for incredibly safe positions, positions that don't really take a lot of risk to me, but then I can get in at a smaller level to make sure that the risk is mitigated. So I think I took one short, another short, because I was gone for this point. I don't know. I think it was at work. I took another short around the 450 level and closed it out a little too early, but still got down riding through here. And then took another short at the 454 level, and its decline had stopped. At that point, I felt unsafe in the position, got out. So I haven't really done too much lately, and of course we've broken through this line. But one of the big reasons why I haven't done much is there really hasn't been much of a position for me to make a lot of money, or at least fit into my risk reward category. Because here, let's take this down. Because for me, the biggest things that I focus on are patience and time, and having for me the perfect setups. And like I said, a trader's greatest friend and asset is time, and that's because uh, you've got to protect your bankroll. I mean, you might miss an opportunity. You might have missed a $50 move, 50-point move that would have went in your favor. But as soon as you start tying in emotion and trying to get on the bandwagon, that's when you really open yourself up to risk. So that patience, that understanding of how time is such an important asset to you, allows you on a psychological level to step back, sit back, and say, okay, well, if I don't find a good setup for me today, there's a good setup for me tomorrow. If I don't find a good setup for me tomorrow, there's probably one within this week that I can make some good money in. But the point is that by doing that, by not trading a relatively position, or not trading just because you're bored, because I know a lot of people do that. Flipper, you probably do that too. I've done it. But not trading because of I mean, you're bored, or you want to see some action, or you got to make money right now. You don't have to do any of these things. In fact, if there's so many opportunities just within the Bitcoin market itself to spring on average 1% a day if you're patient. The key to that is not losing money, because as soon as you start rolling that thing back, then now you start to get emotional, and by getting emotional and also rolling things back, you then have to make up those gains to get back to the point where you are, and the reason why taking a hit for me and in general is so dangerous on just the individual trade side is the same reason why making small gains over a consistent amount of time is so important. And here I will get back my screen share on here. Can you guys see my screen now? You guys there?
I see. I'll go to a different.
See my screen? Yeah. Ooh.
Yeah, okay.
Oh, I just jumped over to Hubi, and looks like they're having some downward pressure. But anyway, the same.
It looks like it's leaving me behind. I don't know if you can see my screen, but I mean, you live by the sword, you die by the sword, right? So I'm all Mr. OTE short sweet spot, and this is making me sick, right? I mean, I've been watching this channel all day long. And a rising wedge, right? This rising wedge is bearish.
Yeah.
This crap, I've got my order sitting right here. It's been sitting all day long. I got the OTE sweet spot. I got a nice 144. I was hoping for a nice 78 tag here. And look how close it got. Oh, this is sick, Market loves to do this to me. It's just awful.
Yeah.
So we got as high as
Well, I was.
171, $2 away. Ay, caramba.
Well, I was originally in a short position coming up to this point. I had shorted right up to 456 earlier, and I started to see, and we had dipped down right after that, so I felt pretty good. But then, as you can see, we started up. Oh, by the way, can you guys see my screen?
Yeah.
Okay.
Well,
We started to
see
have
a zoomed in
that
chart.
slow rise up. What?
Yeah, no, that was good. Keep going. You were doing fine.
Oh, okay. But I actually closed it just under because it started to I started to see on some of the other exchanges that there was a little bullish pressure, especially on BTCE. And at that point, I had to make a decision that, okay, well, that this top range here, yeah, that might have been a good place to short, but at the same time, it hadn't that rise hadn't started really its fail down. It hadn't made a new leg down, so it was still a pretty risky position. So that was when I was just making those cheap shots at the very tip top until I got a footing, and then eventually covered it before it went against me. But,
what
going back to
kills
what I
me?
was saying.
What kills me is I saw Dan.
Oh, go ahead.
Can you guys hear me? I don't know whether you can or not. But anyway, I saw a post
Yeah.
Dan V did earlier today, and he highlighted this. Where is it? I guess it's this 61.8 here.
Yeah.
And this is my silly. I'm Mr. OTE, right? So that's this whole zone right here, right?
Mm-hmm.
And oh god, I wonder if I joke because a crude oil trader that I work with, he just makes his living. He goes by the screen name Mountain Man, and he makes his living off of just 61.8 tags. So I saw it. Hold on, see if I can show it here. Where is it? Hold on. I guess this was fine. Oh, that's fine. You have to go down there. Anyway, you see how, and it's right at the 200 SMA, right? So it's just killing me here. If he is proved right, and I'm proved wrong, I'm gonna be so choked. Because Fibber used to bug me earlier about how I was really greedy, always going for the 70.5s.
Yeah.
What I'm really hoping for is just a nice spike up into here just to fill me and get me out of here. But anyway, I've seen this. The problem for me, this is risk, right? So being long here, I have to realistically risk down to 427. So 465, I could get that fill at 475. That's $50.
Mm-hmm.
Anyway, that's my woes on Bitcoin right now.
Stuart says, Brian, you're giving us epilepsy.
I don't understand. Is that a good thing or a bad thing?
I'm pretty sure he's talking about your chart right here.
So many.
How you have like 50 things listed on there. Alternating screen views. Okay, no, that was it. But but for me, it was you got like I don't know how many Fibonacci retracements are on there. Yeah, way too many.
Fibs.
But anyway, so back to what I was saying. Can you guys see my screen?
Yep. Hey, well, that's cool. What's this?
So this is the Compound Daily, and I was talking about how back on the extended period of time, the the just making a little bit here and a little bit there, and 1% is pretty high in the mainstream industry, I guess you could say. Most I would say if a hedge well how many guys that you know or you work with, Brian, make upwards of 100% returns in a year?
I couldn't tell you off the top of my head. I mean, it doesn't really work that way because
I mean, not.
you might only have like a $5,000 stake, right? And if you're clipping $2,000 from the market monthly, well, that's thousands of percent a year, right?
Well, I mean, bigger guys though.
Well, usually the rule of thumb, if you follow Peter Lynch, do you know who he is? He was
Oh yeah, I'm a big fan of his stuff.
The goal is, I mean, if you can achieve double digits compounded annualized return, I think he averaged like 20% compounded average annual returns over like a 20-year period.
Yeah.
It was a staggering amount of money.
Oh yeah. And anything that you can compound is absolutely incredible. I got the thing here with that Albert Einstein compound interest is the eighth wonder of the world, and he who understands it earns it, and he who doesn't pays it. It goes the same way for your losses, by the way, and like I said, I don't know if I probably won't be able to maintain it, especially getting into higher levels. But in the 6 months I've started, I've been doing consistently about 1% per day on average. I look for those 5 to 8% moves every week. So, but let's say if that was sustainable, though. Say you had $10,000 stake. And over the course of a year, what would that turn into? And as you guys can see, pretty much $100 each turnaround every day starts to very, 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 very quickly add up. And down here at the bottom, within 1 year, that ends up being $377,000. So, is that realistic? Not very. But that's where the being patient and waiting for opportune moments come in. And let's see here, where'd it go? There we go. Bitstamp. Just being, let's say for those who are trading Bitcoin out there, let's say that we never have a parabolic run up again for that, and this never happens anymore. Let's say this entire thing stays into a bear market, and we eventually crash down to some, $15 level, or maybe we'll just bounce back and forth in this range for the rest of the next few years. I don't really think either of those cases are likely. I think there's eventually going to be a bull run up, and for a lot of people, they see that as well right now. But I'll wait to call that till it happens. But let's again say that this never happens. There is so many opportunities just in this back and forth, especially these smaller movements through here, all of that volatility, in so many cases to where, let's go in here, where I did exceptionally well is during the GOX crisis, where you had basically a consistent trend, a consistent downward trend that would end up getting exaggeratedly oversold, and come to a point where you could tell with the momentum and other indicators and the general direction of the ticker, the price action and the orders that are coming in, as well as the order book, that okay, everybody was done, and we would make our rise up. And I would be waiting, and this is back before I was trading on margin. I'd be waiting and waiting and waiting and waiting and waiting just for that good moment where basically, let's say, it had bottomed out, but you really couldn't tell it until let's go down. Let's say it had bottomed out as the recent action, but nobody really knew if it was truly bottomed out here or not until it made that leg up. That's the moment when this started to hold, is when we started to get back into this bull market, at least on a short-term time frame. So if I was looking out within a crash during that time, would have been where I would have bought. And of course, with those crashes back then, it was even steeper than this range that I'm looking at now. But and then would have rode it probably from there up to the top of this before getting out, because I like to cover certain positions. And then I would have waited until basically it started to make another rise up. So I basically let the for me, I let the trend make my decisions for me. I won't make a move until others have already started making it. So I'm very against catching the knife per se. Let's see. I got this on here. In fact, let me pull up on Reddit. Me and Flipper were talking about here recently, because he was calling the bottom on it, and I was like, oh, I don't know, and he might be right, but I'm very against catching a knife, calling bottoms, and there was some funny comments on the deal. Let me pull this up. Let's see. There we go. Yeah, he was, and so far, Flipper is right. So far, we've not had another step down. But I had made the point that catching falling knives results in blood more than not, and that hope was the destroyer of bankrolls. But somebody else made a much better comment. Top comment was, the only thing that you get from picking bottoms is a smelly finger. That one I'm putting in the back of my pocket right there. I'm saving onto that quote. But it's true.
Getting. I'll just throw my 2 cents in here. This sell-off, right?
Yeah.
My whole study with ICT is that the institutions see this, right? But they're not selling into this.
Mm-hmm.
So if they want to participate, they'll engineer the counter trend rally. And so our little helpful tool, if we want to participate in this sell-off too, is just to wait for them to get back into this little window.
Mm-hmm.
And that's the real value of this little OTE engine. So you had to have cojones, and you're getting paid to have those cojones to step in and buy there.
Mm-hmm.
And way to go. I would argue now, and I don't know how long this may take. I doubt we're going to get any parabolic move higher here.
Mm-hmm.
But it will be now where we find out whether this is actually for real, right? And if we break, where's a logical place for us to at least now find out whether this is actually a bottom down here or not?
Mm-hmm.
You know what I mean? So, ironically enough, the hard part of the trade for the bulls is right now. This next, what is that? That's 492, and here we are at 465. This next $30, this is a tough slog.
Mm-hmm.
And it's going to be up and down kind of idea. if we just fail right here, I'm going to be pissed off. But, you know, it met that OTE zone, and you see they took price up into it and whacked it back down. Took it up and whacked it back down. So already you can see that somebody likes the idea of hitting it up top there.
Yeah.
So, you know, the irony of it all is for the longs, this is the risky part of the trade. You know, guys who had the guts to step in here with, you know, Willie oversold and, you know, them throwing the baby out with the bathwater and all that kind of crap, right? This, ironically enough, was probably an easier trade long than this right here. This is a tough slog. And really, you know, if I was respecting the institutional flows, you know, the fact that, the fact that we broke this low, right, and we didn't just dip through it. We dipped through it, came back, fought, then broke it, then came back, then tried to recapture it a couple times and failed, right? And back up here, real battle point here.
Man, I accounted for like 50% of that volume right there. I was trading that back and forth so much.
Probably. So this is what they call a point of control, right? So yeah, we might get, you know, little zips up to here, you know, that's very realistic. Who knows? But as I see it, this really seems to me a point of control. And then you always hear me talking about the 38.2 fib. That's my first stop target, right? So, you know, either of these scenarios is perfectly realistic through here. You know, is it realistic? You know, is it, you know, like the sad thing is you may get a news event here, right, that pops it up here, and the public will actually be buying that, right? And the sad part about it is that buying right here is very risky, in my opinion. Like, that's very, very risky. Just because we had so much overhead resistance here before, right? It's got to get through this before you actually realize that this is a good trade. So, you know, so I guess that's the way I look at it. You got to congratulate guys. You know, the guys that had the guts to go in and buy down here, they're getting paid now, right? But I think we have to put it into perspective and understand that, you know, what a coincidence where it originally broke down, right? Here's the original breakdown right here. Right? I mean, that's as plain as day. That's right into this silly OTE zone, right? Right into that zone. So, you know, I mean, this is, it's well, I'm not saying that this is a bear market and that I'm going short here. If I was to be looking for this thing to be topping out, this is exactly the area where I would be looking for it to top out.
It is a bear market, though.
Well, and that's the thing, right? You look at the higher time frames, and they certainly aren't supportive of longs, right?
Yeah. This is why I look for more short positions than I do long positions. But I mean, I still take a long position here and there. I just don't stay in it very long.
Well, so, you know, now this is the 1 hour chart, and so there's that OTE again, right? And so, you know, here's this channel that we're sort of working our way down through. So literally you're saying, yes, I am expecting this channel top to be broken, and I got into that trap last go round, where, you know, they basically made the market look like it wanted to break the top of this channel, and it completely failed, right? It totally fell apart. I'm not saying history is going to repeat itself. I don't know how this is going to play out. But my hunch is, you know, whatever it was that, you know, like, I'm sure there's lots of guys who saw this happen and go, oh, shit, man, that's where I want to get short. I want to be short there. So they've engineered this to get us up into there. Pop it above the channel a little bit. All right, everybody's long. Yep. And then right back down to the bottom of the channel. That's sort of my hunch, but we'll see what happens.
Yeah, that's why I'm incredibly cautious during that time frame, especially because it's not just the channel either. It's also that resistance right at the 500 level, and then it's the resistance at the 530 level, and then the thickest amount of resistance at the 550, 560 level. It's just within a complete bearish market, with a lot of bad news going around recently. So.
It should be interesting to see what happens here. I mean, we used to always say you can't write better fiction than reality. So whatever it was, when you look at a chart like this, right? To me, the question is, what's the risk? And I think you still have to realistically risk to have that low tested. I don't think that that's off the table. This is too much of a V bottom. Does it stay in this channel? Maybe we pop up at the top of the channel, and then the top of the channel line actually becomes support. That I've seen that happen before lots.
Yeah.
But a real explosive move now, and somebody, the person that I was giving the tutorial to today, he and I kept talking about this. The volume here is abysmal. I mean, it's nothing, which really scares me, right? And
especially in comparison to the selling volume that takes place.
Yeah, well, and that's why I use my OBV, right? And we're making lower highs and lower lows. Now we started making higher highs and higher lows, but really we haven't seen any serious, like, chunky big green bar volume. Maybe that comes in here, but as a trade setup to say, all right, this is when that big chunky bar is going to come in here, that to me sounds like that's asking a lot.
Yeah.
But who knows? Can't write better fiction than reality.
Now, if there was a push with enough volume, and I'm not just talking about one guy, but enough buying volume similar to some of these selling positions, then I might jump on that bandwagon. But it's just been unheard of here recently, especially since, the last time that was that run up to 700 that failed. So that would be evidence enough to, even at a higher position, for me to jump on the bandwagon. But for me right now, that's where I'm just waiting patiently for that perfect short position right now. Yep.
500, eh? So you're making the call here, 500.
No, I'm just saying.
That's fine. No,
I'm saying that if some heavy buying volume did end up
I could see it going up to
coming
500.
through, then.
And then back consolidating back to this 450 area. I could see that happening.
Yeah.
But anyway, do you buy here? Absolutely not. I think this is a horrible idea to buy here, but that's just my 2 cents.
But yeah, absolutely. That's why I'm looking to short, waiting for that position to short. But
all right, so it's now 8 minutes to 7. We've been on for 2 hours. I got a sneaky suspicion I missed my sell window, but not much you can do about it. I hope you've all enjoyed the show. We have about 8 minutes left for viewer feedback, so we have quite a few people in. Let's see if I can find which window I'm looking for here. Can't even remember. Well, I guess I'll leave it on that one. We have quite a few people in the forum here on Google. And I can always post this if you happen to be watching YouTube. You got about 5-10 minutes left. We'll just leave the floor open for questions for the next couple minutes. If you have a question, feel free to post. Other than that, I guess in a sentence or two, Landon, what's your message for this week?
Oh, well, I just wrap up the patience and time thing. A lot of good quotes to hold on to. There's, of course, one of my fans, Jesse Livermore, is that money is made by sitting and not trading. That it takes time to make money. He's also quoted as saying, "Nobody can catch all the fluctuations." Flibber. He's quoted as saying, "Buy right, sit tight. Give me timing, or don't give me timing. Give me time. Men who can be right and sit tight are uncommon. And let's see what else. Yeah, yeah. Oh, and to play the market when only all factors are in your favor. Nobody can play. No person can play the market at all times and win. There are times when you should be completely out of the market for emotional as well as economical reasons. So, yeah, this is a long haul game that if you play smart and take your time with, that's how you end up making money with it.
All right, that was the longest one or two sentences I think I've ever heard.
Oh,
I'm just playing with you. All right, so let's see. Do we have any questions here? Any suggestions on best exchanges? So if you had never traded a Bitcoin before and you were advising or you're advising a friend, Landon, that had never done this before, where would you suggest they go?
it depends on how much money you have to lose, or can stand to lose. The exchange with the least amount, Andre, the exchange with the least amount of risk, I would say, would be the Stamp Coinbase combo. Of course, Coinbase has really high fees and is more of a retail outlet, but it is the safest place to buy and sell. As well as Stamp is definitely on the top of the list. Mine is moderately risky. I'm on Bitfinex, and but they allow margin trading, and I
Where
don't
did
have $100,000.
where does BTCE stand in your view?
BTC. Well, I actually left BTCE for Bitfinex for that very reason, because it was right after the Gox incident, and I mean their platform is kind of but it wasn't just that. It was I know, BFX is just as anonymous. Yeah, but the difference is it's in Hong Kong. Eh,
So it's the triads.
yeah, I'm well, not Chinese mainland, but Hong Kong has a completely separate government from normal Asia, and they've
How could
actually
you
come out
spell?
with statements that saying that they have no plans to tax, to regulate, and they don't even care if you do anything illegal with it. So they're not going to touch it. And so that was the big move on the government side. For for BTCE, yeah, I know both sides are anonymous. One of the big selling points for me was back when they had the flash crash down to that I think that 100 level, and a lot of the long positions had gotten liquidated, and basically everyone got margin called, and Bitfinex actually stepped up, and I know not everybody got reimbursed, but a good majority of the people that happened to, they ended up giving their money back for their positions, whereas BTCE didn't for a long time, and they ended up dragging their feet and finally doing something for it. Okay, what was this? Was this? The owner is contactable on LinkedIn. Isn't anonymous. Has Hong Kong. Okay, okay. Um, See, I thought. Well, they were anonymous. I didn't know if um, they had come out. Oh, so you can find them on LinkedIn, huh? Oh, that's cool. Um, Keep players are French. It's incorporated in Hong Kong. Rolling back the trades. Blows. Losers should have lost. Um, Landon, do you have your referral number I could use? I also have a question about taxes. Anyone paying attention to that? Um, Referral number. You mean for Bitfinex? I didn't know they had a referral thing. I don't know what you're talking about. um,
Well, I tell you what, why don't you, Julian, maybe you can PM LowPro for that referral stuff after the show. So keep in mind, guys, we were supposed to try and stay on the theme of trading plans, trading psychology, all that kind of fun stuff. I think we did pretty good. We snuck over to Bitcoin every once in a while, kind of cheating, but I thought we did a pretty good job staying on theme this week. Yeah, and probably we should be talking more about taxes because it is tax season and what are the implications. So actually, not a bad idea, Julian. I'll make a note to try and make that a key item to talk about next week. Okay, so good suggestion there. And yeah, not a bad idea. We should talk about how leverage works into the plan as well. All right, so it is basically about 7 o'clock here, guys. So I will leave the chat room open for those that are in the chat. But basically, we're going to bring the show to a close here for our YouTube audience. This was Brian Beamish with Landon LowPro on TradingView.com. We are regular sort of posters and commentators. We run this weekly show every Saturday to help people deal with trading anxiety, building trading plans, how risk should be incorporated into your plan, and all those kind of fun things. I hope you've enjoyed the show. We'll be back again next week, same bat time, same bat channel, and hopefully with a whole bunch of stories of success. So until next week, Landon, have yourself a great trading week.
Hey, you too.
All right, and everybody out in internet land, I hope you enjoyed the show. God bless, and have yourselves a great evening. Bye for now.
Take care.